All right, what is up, tycoons? Super excited for today's video. We are going to be breaking down Atom. Okay, we're going to look at Cosmos. We're looking at the daily chart, and I'm going to break down all of the recent price action, and then I'm actually going to go and show you how I've used these chart patterns, how I've used the divergences, pretty much everything that I'm going to show you. We're going to go and we're going to look at how if you back tested these strategies, how they would have performed and how they worked. And by the end of this video, you're really going to learn a lot. It's going to be very informational and educational. And if the screen looks complicated right now, don't worry. I'm going to break everything down so simple for you that you'll be able to understand as a beginner. And if you're not a beginner, even if you're more experienced, you'll still learn something out of this video. So all I need you to do is smash the like button and subscribe to the channel if you're new, because I'll be dropping content like this every single week. I'll be dropping about 5 to 15 videos a week, just depending on my schedule and how busy it is. Okay. So what we're going to start off looking at is the current pattern. We were looking at this triangle pattern, and this is a neutral pattern, okay? A lot of people can mistake these, triangle patterns for bullish or for bearish, but, it's neutral. So your best choice is to just wait and let the price action develop and see if we get a breakout to the upside or a breakout to the downside. Now, we most recently have just broken this trend line, and we bounced very beautifully off our 50% retracement level. So what this is I'm using the Fibonacci tool over here, all right? And what I've done is I've taken the swing low up to the swing high, right? And no coin, no token is going to move in a straight line, either up or down. It's going to retrace and continue the movement after the retracement, or it's going to break your retracement levels and, possibly reverse the trend that it's in. So what we're seeing here is we had a sharp move to the upside. We retraced, bounced off of our 50% retracement level, and we're continuing to head higher. So we're going to look after we got the breakout if we can come up here to our bullish price targets, right? So my next breakout level is going to be up here at 17.2. Above there, I have bullish price targets of 21.3 and 27.95. Now, the reason that we use these levels, okay, we use the 38.2, the 50%, and the 61.8 for retracements is because one, the 61.8 is the golden ratio. It exists all throughout the cryptocurrency markets, the stock market, and nature itself. If you don't believe me, I've done a whole video on the fibs explaining that. I've dropped multiple videos and tutorials on the fibs. So definitely check those out if you're a little bit confused, but I'm going to continue explaining it and giving you guys some past examples now. Okay. So the first one we look at is if we come over here and we can see a clear retracement and then bounce, okay, basically off of the retracement level. So we have the swing high up here connected to the swing low, and remember, nothing moves in a straight line. So we come down, all right, have this very aggressive move to the downside. We come up and look at where we find resistance. We find resistance right at our 38.2 level, and then we ultimately end up dropping down after that. But as I noted, we're holding the retracement levels of that move up, right? So it looks like we could be trying to start a new trend and possibly come up and test the golden ratio of 61.8 of the retracement of this move down, right? So that would take us up here again to 22.82, which is right around some of the bullish price targets that I have as well. All right. Now, if you look more closely, okay, we zoom in just a little bit more closely, what we can see is a simple pattern known as the bear flag, all right? So the bear flag is indicated by a sharp move to the downside. That's your flag pole, okay? And the flag itself is actually going to be these channels right here. We're consolidating in these channels, absorbing the recent price action and move down. And then once you break the bottom of this channel, all right, you can expect to see another push down, right? And we just bear flag and bear flag and bear flag, right? So we get a bear flag here, we get a bear flag here, we get a bear flag here. Now, the reason we don't continue heading down, and playing out the rest of this bear flag right here, all right, in the breakdown is because we actually do something known as divergence, okay? So we're going to take a look at our relative strength index down here now, all right? And we're going to take a look at these two circles. Okay, so this is your relative strength index. Obviously, it measures the relative strength of a token at its given price. So what we're seeing is the token is obviously dropping in price, but it's actually gaining strength along the relative strength index. We have a low here and a lower low here. We have a low here, and then we have a higher low right here. That's what's known as a bullish divergence. It's an indicator you may see some bullish activity in the future. And look at how big the move was that it made, right? That was a 200% move you could have entered into off of that bullish divergence signal, right? Now, the best thing is when you get chart patterns and, divergences and whatever other signals you may use, but specifically, we're pretty much just going over chart patterns and divergences in this video. And it's a really good indicator when you can combine them too, right? Sometimes, you may get a bullish divergence, but you may only get like a 30% pop just to continue heading back down afterwards, right? So we'll go over and look through the chart, and we'll look for some examples where we had a chart pattern and we also had a divergence, right? Now, the first one is going to be this M pattern. All right. Now, you can call it a double top, okay, where we have a top here and a top here, or you can call it an M pattern. Whatever you want to do, that's fine. But notice how we have our double top, which is a bearish pattern, okay, and then we have our relative strength index showing a divergence, right? So we're basically remaining flat and holding these levels with the double top, but the relative strength of the token is dropping. So that's a slight bearish divergence. You combine that with a bearish chart pattern known as the M pattern or double top, and you see we get a very sharp move to the downside, right? We drop about 38% right there, ends up dropping about 52%, and ends up dropping much more after that. But you wouldn't have been able to tell that just off of this pattern alone. Now, here is another great example of using the fib retracements and why they are so well respected, right? So what we do, again, is nothing moves straight up or straight down. We took the swing low here to the swing high right here, and we see we come up, we retrace perfectly to the golden ratio, right at the 61.8% level on the fibs, and then we get a continuation of that bullishness that we had in the beginning, right? So that was another example right there. Here we have some bullish divergence. Okay, we have a low here, lower low, we have a low, higher low. We get a very nice impulsive move. If we take a look at that measured move based off of the divergence, okay, that ended up being a 100% move that you could have traded using that signal. We come over here and we get some more bearish divergence, right? So we keep talking about bullish. We showed a little bit of bearish. Here's a clear bearish divergence as well that resulted in a pretty significant drop. We have a high here, have a high here. Clearly, we are in an uptrend, right? But the relative strength index is in a downtrend. So while the token has been going up in price and getting higher and higher, the the strength of this token has just dropped and dropped and dropped. And again, you can use this to protect yourself as well, right? Like maybe you're not trying to short anything, but let's say you're riding this momentum up and you're wondering, okay, well, when's a good time to take profit because potentially we could drop and I can get back in the play. That ended up being a 50% plus drop, and then you got bullish divergence. You can come right back in. So let's say, let's say you entered in somewhere random over here, right? You ride this momentum up, boom, that's 70%. Let's say you got off of that. You protect your trade from losing 50% of that, and then you see a signal, a buy signal with the bullish divergence, and you capture another 100% move right there. So then you made 170 percent on your initial investment, right? You got 70% off the first trade, you protected the trade, then you came in and got 100% on your next trade. You saw it was time to protect the trade again once we had a double top and a bearish divergence. And this is what I mean by using these signals for entries and exits. And the more indicators you have aligning together, and when you have multiple signals telling you, indicating some future price action, then that really gives you confidence. Okay. And that's what you need is you need confidence, especially as a beginner, because a lot of times it's just guessing, right? So this can help you take the guessing out of it and will greatly increase your odds. It's never going to be 100% accurate. Nothing is, or we would all be billionaires if everything worked 100% of the time. But again, that's really what's going to help give you that edge. All right. So here, we'll go ahead and take a look. This is a great example of the fibs playing out again, and why these three levels are so respected as retracement levels. Okay. So we take our swing low up to this swing high. We see we come up, we come down, we retrace, right? And we find support along the 50% level. And then boom, we get that continuation of the explosive move to the upside. Right over here, we're starting to see some bearish chart patterns now. All right, we're looking in look how this seems like a small pattern. It doesn't seem like it's a big move. Look how big of a percentage this drop is from the highs down to the lows, 40%, right? That's a big deal. If you have 10 grand in this and your 10 grand turns into 6 grand, you might panic here. And then just for it to run back up. But if you see this pattern forming, you can protect your trade, get out of the trade, and look to potentially get back into it after the drop, right? Over here, we have the same thing. We have that wedge pattern forming again, right? We have a bearish wedge, a bearish rising wedge. Seeing the price action zigzag in between here. We break this bottom trend line, and that's when you get the sharp move to the downside. On top of that, we had bearish divergence. We have a high here. We have a higher high here. We have a high here, lower high here. The relative strength is dropping. The token is getting weaker, but the price is going higher. That's a divergence. It's an indicator you may see some bearish activity, and we get a very sharp drop afterwards. Over here, we have a great example just again of using the fibs and using them for retracement, right? We have our swing low up to the swing high. We come up, we retrace down to the 61.8 golden ratio, and we get the continuation of the trend and continue up higher. If we break these levels, we're going to come back down and retest the lows, right? So that's why I'm watching these, and that's why I had these charted up in the past, right? We come over here, we see two patterns repeat themselves very shortly after, right? We get an inverse head and shoulders 2 times in a row, right? So we come down, we make a left shoulder, we drop lower, we make a head, we come up, we drop, we make a right shoulder, and boom, we get the pattern to play out perfectly. Over here, same thing happens. We get a left shoulder, we get a head, we get a right shoulder, and the pattern comes out and plays out perfectly, all right? And then over here, we just have some more examples of the fibs and them working, right? We have swing low, connected to the swing high. We move up, come down, retrace, and look, we bounce at the 38.2% level this time, right? So we come up, we bounce at the 38.2, continue up higher. Over here, this is a good example of how you can use it as resistance as well, which is kind of what we were doing in the beginning of the chart, right? So we're taking the swing high this time to the swing low, swing high down to the swing low. Nothing's going to move in one direction. We come here, boom, we come up, and our 61.8 turns into resistance right here. We drop, find support at the 38.2, right? And then ultimately we were able to break past this level and reverse, that downtrend, right? So that's what I mean by if we break these levels, we're going to see the trend reverse, right? So we come here, we retrace, find support, we break through it, and we reverse that downtrend, okay? Over here, we're seeing the same thing, okay? Except this time, it kind of plays out, but it also, you could say it doesn't because of this crazy wick up here. But wicks can be very, very confusing, right? So we see we have a high down to the low, all right? And we end up getting a sharp move, right? We get rejected at the 50%. We come back down, we come up, get rejected at the 50% again, hold at the 38.2, get rejected again, come back down, and then we have this crazy wick up here. And that's when we started to form some bearish divergence, right? We saw this crazy wick. We have a high here, higher high here. We have a high, lower high here. That's bearish divergence. And that led to a very, very big drop, over 80 something percent, right? About 82, 83%. As a result of that, we end up creating some bullish divergence, right? So we have a low here, lower low here. And what we see is the relative strength index holds its same level. Okay. So sometimes a divergence always isn't going to be like, okay, well, there's a big downtrend and then there's a big uptrend, right? Sometimes it can be as simple as we're in a downtrend on the price, but the relative strength index isn't dropping, right? So normally this should follow it. They should both follow each other. And when they don't, that's when you get the divergence. So we get a slight divergence right here, where we're maintaining strength as we're in a downtrend. And then ultimately we get a very, 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 profitable returns on those, right? If we look from those lows up to those highs, that was hundreds and hundreds of percent, okay, about 700% profits there, just off of that initial bearish divergence, or I'm sorry, bullish divergence right there, okay? So 80% drop off of the bearish divergence, 700% gain off of the bullish divergence. Okay, so hopefully you learned something new. Remember to subscribe and smash the like button if you did. I'm going to be dropping videos like this all the time on lots of cryptocurrencies, on stocks. I got, I have a 50K portfolio that I'm dropping like updates on. I just started that channel, or that little playlist. I'll be updating that one at least 1 time a week. And that's it. Okay. I also want to mention that I do viewer requests every week as well. So if you have any tokens, any cryptocurrencies, any stocks you would like me to analyze, give you some technical analysis on, make sure to let me know in the comments below.